Welcome back to the channel of Truth, Trust and Transparency. Today I've got another deal review. They're flowing in thick and fast on the socials. So I thought, why not do this particular one? It's located over in Western Australia, Perth. So really interesting market, especially the last couple of years. We're going to have a dig into this one and see, and I'm going to give you my 10 cents and my thoughts on it. Let me know in the comments if you agree or disagree or what your thoughts are. And as always, if you have a deal you want me to look over, please reach out on, Instagram DMs, for example. Really, I'm on there. Send it through and I'd love to take a look at it and provide some sort of value in a quick review on it. As always, guys, if you're watching this, please would appreciate it if you could subscribe. We're trying to get to 2,500 by the end of 2025. Huge task. I'm almost at 1,000. So if you could subscribe, I would really appreciate it. So first and foremost, one thing I do like to do is jump in and have a look at the property data of the area. As you guys can see here, I'm using the hashtag interface, higher than average growth, for those of you playing along at home. Now, the first thing that I can see from this particular area, the suburb is called Alkimos. I'm not sure on the pronunciation. So if anything, just tune into these deal reviews to watch me butcher suburb names for a bit of a laugh. But if I look at just quickly the price growth across the last 6 months, year, 3 years, and 10 years, the last 6 months, 3 and 4 bedrooms in this particular suburb have done 4 to 5%. In the last year, they have done 10 to 13%. In the last 3 years, 55 and 68% respectively. So one thing I would comment on here already is that it appears as if this particular suburb has already went on and is already in some sort of growth run. Obviously, we know that is similar to what's happened with the Perth run in a lot of other suburbs. So one thing you want to know and ask yourself before you buy in a suburb like this is, what is the goal for this particular investment? Because if your investment is to hold it for a few years to try get some capital growth, to refinance and go again, then buying in these sorts of windows where you might get 10, 15% is great. If you're looking to buy and have a long hold run and own this property for 20, 30 years and it's going to sit in and just be a really good operator for your portfolio, then you want to have a think about potentially more along the lines of how that suburb has performed over the last, couple of decades, where in that timing of that growth run may be less of an issue for you if you're holding it long-term compared to short-term. However, let's jump into it, shall we? For those that don't know, this particular suburb, it's in the city of Wanneroo. It's located north of Perth CBD. It's kind of at that borderline edge of new housing estates north of Perth CBD. And it's sort of like that next suburb along. Typical price for 3 bedrooms is about $720 and 4 bedrooms is about $850. You're renting at about $540 per week, meaning the yield is quite low at about 3.5%. Now, significant dwellings, 6,300, significant population. There's no real bushfire and or flood risk and decent infrastructure spend. When I look at the data, automatically I can start to see that potentially there was not a lot or anything prior to, 2010 to 2012. So it's a relatively new suburb. That is also, because it's a relatively new suburb, we can see that in the growth rate cycle. What you'll often see with these new suburbs is growth rate cycles that are quite unpredictable, and that is because you have releases of stock. Like, for example, I know Fraser's is doing a lot in this particular area, and, they might finish a master plan or a section of their master plan that brings 50, 100, 150 new pieces of stock to market, which can also flood the market. Which could have been, familiar of this particular rut here. And, these areas here could have been a slightly smaller release, and then you see the capital growth. But that's one thing you need to look out for in these new suburbs, is that you do have an unpredictability in the growth run because they're new and there is more and more and more stock being released. You can't expect to likely have a steady growth rate, in my experience anyway. In terms of URSAD is quite high, so we do like a higher URSAD. 28% owner rented to owner ratio. So again, I don't think that is a huge issue. It's sitting on probably, pretty typical. There is a 3 to 4 bed arbitrage. However, if it is a new suburb, what you're going to find is that you probably won't have that opportunity to convert a 3 to 4 bed if there's no established homes. Those older builds were built quite spacious. They had separate dining, separate living rooms that you can convert to bedrooms. Whereas in the newer construction, and if this suburb's only sort of circa 10 years old, we might not be able to see those opportunities. It is sort of borderline still affordable, sitting at 32 years to own, so not too bad. My one sort of issue is around how much more stock is coming to market. When I look at the rest of the data, I think one thing to be very mindful of, and as I said, not even looking at this yet, but in that growth rate and in the fact that this suburb is relatively new, is the building approvals. You have 10% building approvals. So an extra 10% on top of this market being approved and ready to be built out. So my question for you guys is going to be, or someone that's looking in this particular suburb, is there the demand for this particular, for 10% more building approvals, 643 building approvals for this particular area? Is there the demand there? What can we see? So the days on market over the last 5 years have been decreasing. Over the last probably year have been increasing again. So that could be an indication of once things are selling, once things are taking longer to sell, some demand coming out of the market. Vacancies as well are starting to increase quite consistently. So again, it's raising some concerns, in my opinion, here of, okay, well, if I still got 10% of building approvals to come, and my days on markets are starting to increase and my vacancy rates are increasing, is there demand in this particular area, or when is the developer going to be building these? So inventory, stock on market's sort of been a little bit all over the place. Building approvals, as we can see, is pretty consistent, and hold period, as you would see with a new estate, is sort of up and down. So my initial thoughts are here is, depends what the strategy is. My big worry is with these particular suburbs is building approvals is massively high, 10%. Stays on market is sort of starting to increase again. And look, that lines up 2024. That lines up pretty much with vacancy rates. So it kind of looks like if vacancy rates are increasing and days on market are increasing, that there might not be the stock. There might not be the demand there for all this stock. So that's a little bit of a worry. Where it currently sits in its growth rate, now it's done 25% in 2024. Will there be growth off the back of this year and into the future? Yes, definitely, because we know, and as we can see here, if we look at any of these peaks, you will have growth afterwards, but your growth is heading one way. And we don't know if we're heading down into this trough here again, or if we're heading into a trough like this. It becomes pretty hard to predict. Obviously, my worry is that we could be heading into a period like this with the volume of building approvals and the lack of demand in this market. So I do think in the short term, we're going to see some above average returns, but for how long, I'm not too sure. And I think that after that, we might see a bit of a lull and correction period with a lot of, like we are with a lot of the other Perth estates. But let's look at the asset now in a bit more detail. So the address for everyone playing at home is 81 Trethowan Promenade, Alchemist, Western Australia. The first thing I noticed here is, and as we have known, a huge amount coming online. My take on new housing estates and land supply is not particularly a huge issue. I know a lot of buyers agents will run out there. Building approvals and that isn't an issue if the demand is there, but if the demand is slowing up and you still have so much more to build, then you may have some issues. We've got a train station in close proximity. We have some amenities in close proximity. We also have sewage treatment plant just down the road. And as you guys can see, we are quite north of Perth. So the location, look, you're off the main highway. Trethowan Promenade is obviously a prominent street. However, it's not going to be too noisy, I don't think, because if I look at it this way, a lot of the traffic comes through here and will filter out onto Santorini Promenade. So I don't think traffic is a huge issue. Dual lane access is cool. However, the block does look rather small. If I have a little look further on, I'm using a platform called Land Checker. You can definitely check it out if you want. But the biggest issue that I have now with it, it's obviously a new housing estate. So I think if I turn on the planning layers, easements, topography, not much happening there. Flood, aircraft noise. We know it's urban development. That's quite obvious. My issue here is going to be the land size. The land size is only 180 square meters. That is tiny, 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 tiny. And we know the part of the property that appreciates is the land size and the land size. So I know that this particular deal is going to go for around 600,000. So it made me want to have a look at and into the real estate market. Let's look at the listing actually and have a look at what that looks like. So this is the house from the front, relatively new construction. This is, I don't know if this is a Perth thing, but this is extremely interesting to me. Tiled walls and a setup on the windows that would be to black it out, and this could be an insulation plate. Now, I don't know what they were doing in here beforehand, but it makes for a very interesting story, especially in something so newly constructed. Back patio. I mean, it looks like it slopes down towards the house. Not ideal. 180 square meters. It's very small. The kitchen looks, looks like it needs work, or it's sort of half done. Bright blue TV mount, I guess that's okay. Laundry. Yeah, very weird detail. I don't know what's happening here or what this room was used for. Can probably take a guess. Tiled walls as well throughout. It's very interesting what they were using this house for in its previous life. Bright orange room. Wow. Something happening behind these shelves, I think. Down there too. Look, it is sort of clean and tidy. There's not too much to be used. The bedrooms are so small. It could have even been, in my opinion, could have been a two-bedder. It could have been a two-bedroom house that's been converted because... So the first issue I have is the block size. The second issue I have as well, and I always try to say, get a minimum dimension in each room of 3 meters. Here I've got 2.3 and 2.3, so they are absolutely tiny. That could be 4.5 by 5. That could be 2 bedrooms easily. That's a little bit of an issue in terms of maybe renting it out and kids' bedrooms if you have sort of older people. So let's look at realestate.com now. So when I look at, in that particular house, when you think about it this way, right, what land component we can get into in this suburb to start that growth cycle, What's really interesting is for 700 square meters of land, I can buy it for $1 million. This is sold, by the way. If I look at here, 450, 980, 375, 890. So if I look at what has sold in the area for the last 12 months, I think the issue with this particular deal is that the price for $600,000 and the land component is so small that for a little bit extra, you could have got such a larger land component because 180 is so small. I don't think I've ever seen that before. Let's have a look at a few other deals. So for double the land component, 735. So obviously then my trade-off is for 20% more, I'm getting double the land. For something like this, $650,000, let's see what the land component is. So 300,000, so almost double again, 650. So for 10% more, to pay 10% more, is it better to get double the land or close to double the land? I think so. So 55 Missingham Avenue is 375. These are still small lots, man. 750. It is not giving me a lot. If I look at some of these ones, so I look at something like this, right, is 3 times more bigger land aspect for 20%, call it 20 to 30% more in purchase price. I don't know if, and bedrooms are quite small, 1, 2, 3. Probably could do a 4th bedroom off there. Look, to summarize this deal, in terms of the suburb and that sort of area, do I think there will be short-term growth? Yes. Do I know the brief of the property and what the goals are? No. So if it is to extract equity out in a short time frame, great. But the long-term prospect of this particular suburb just worries me a little bit because you have so much stock coming online. Obviously, we've seen how it has performed in the past, which could be an indication when those 460-odd building approvals come in, what's going to happen in terms of prices. So that worries me. And I think the second thing that worries me too is the land size here is absolutely tiny. I know for the $600,000 price bracket, and I should have asked where this guy was located, but for the $600,000 price bracket, there are so many other areas that I know people are looking in, that you can purchase in, that our members have purchased in, where you can just get a ton more land. You can get a better quality asset. You can also get better growth fundamentals. You can see the demand side. You can see the supply is restricted. The demand is there. That would give me better confidence in other states other than Perth, that we've got people that are achieving 4.5-5% yields on their purchase around this price. So do I think it's the best place to buy 600,000? Probably not. And what worries me as well is the small land component, and also what's going to happen this suburb. I do think you will see growth there over the short term. So if that is the goal, and to be able to pull out equity to go again, great, do that. But I think we need to consider the longevity and what is the main goal for something like this, because, for an extra 10, 15%, we could have got something that, would have just done so much, would have done a lot better in this particular suburb. So look, it's an average one. It's probably a buyer's agent special, but yeah, it wouldn't be my first choice, I don't think.